it's going on over in the Ukraine, and that has pushed oil high. Oil's still high, but uh, you know it didn't want to dip below 100. Well, it's finally, at least for the moment, broken that 100 level and continuing its downtrend. Not sure why oil's doing that along while nat gas is taken off, but we will jump into all this. So, Brian, I'm going to flip it over to you. Let's go through some of this headline news, and then we'll get into the charts. And there is actually quite a few charts we want to take a look at this morning.
Yeah, I have the answer to your question. I can tell you why the commodities are going down, and it would be China. Um, Basically, with China locking down for an additional 4 weeks, they're saying that the policy right now it's not necessarily working. Again, we know what Omicron is like. We've gone through it with the United States, where it didn't matter if you're vaccinated, not vaccinated, you were getting it. Everybody was getting it. At this point, if you haven't had a positive test, it basically means that you're like Neo from the Matrix. You guys have seen that meme where it's like, I didn't get it yet. I'm one of those, but if I had to guess, I'm pretty sure that I probably had it with two kids in middle school. One kid was positive, the other one never. I feel like I had to have had it in 2 years with 3 years with as many lacrosse tournaments I've been to, as many kids I've been in close contact with. I was helping out the school system 2 days a week. I feel like I had to have had it at this point, but hey, I'm still a Matrix baby. I haven't got an official result, but I'm now talking about locking down Beijing as well. So not only Shanghai but also Beijing. Um, Again, because of that, commodities across the board, except for natural gas, are lower. And the reason why natural gas is not included, and again, the reason why all the rest of the commodities are is because China is such a huge, they consume a lot. The reason why Australia is massively weakening right now, also because China is locking down. Remember, Australia kind of uses, a lot of kind of like how it's kind of the same scenario. I'm like horrible at, what are they? I forget what they're called. It's basically like your fingers to your toe is this. I forget what that's called, but basically, China to Australia is like the United States is to Canada. Like we buy they buy natural resources from Australia. With them locking down again, it's really, really hurting the Australian economy because all the resources that are typically selling to China, China's in need right now because they're locked down. So that's why things are driving. The reason why natural gas is not driving is because, believe it or not, China actually doesn't use a lot of natural gas. They do consume a lot, kind of compared to other nations. But the data is as of like 2017, and they're still kind of on the same path. But it's 2017, the last time that it was proven gas reserves. That means they were checked by an independent board. They had 184 trillion cubic feet. With that reserve and the base off how much they use, that's 21.9 times its annual consumption, meaning that they have about 22 years of gas left. They're
So
okay.
they're okay with that. It's just everything else.
Yeah, they don't really need it, but again, they don't have the oil reserves. They don't have anything else out there. There's another news article this morning talking about basically coal. They're ensuring coal supplies, the coastal hubs and things like that. So they are kind of going through a lockdown phase, and again, that's driving people away from kind of the commodities and everything else, and kind of more into the dollar with things. Again, where the Ukraine situation didn't really take a positive turn this weekend. We have headlines where basically Putin is like, "I'm abandoning the deal. Like we had a deal, you changed it. We're trying to meet again, and you're changing things." And now he's going back to kind of the land grab strategy. And everybody keeps pledging more and more weapons, but the question is if he can get kind of locked in there. Like, I don't know, what does the playbook look like on into the future?
Right.
If it costs us, eventually people will look at this and say, hey, it cost us 10 times as much as it cost Putin. Was that a positive win for us or a negative win? I don't know. And then at the end of the day, it's kind of like poor Ukraine. Like these citizens are the ones these are the chess pieces right now. It's obviously dwindling. They're the Russian military obviously dwindling in size. Everybody's throwing hundreds of millions of dollars into the weapons used to help dwindle them. I mean, it's a mass use of resources on all sides, and Ukraine is the chessboard.
All for what?
For what? I mean, who knows? If he's getting the buffer, he's not getting NATO now, which I think is pretty much guaranteed. There's other countries now that are like, oh, we're going to join NATO now. And he's like, yeah, go ahead, try it.
I think they might.
Yeah, I mean,
and we'll see what happens. Is he going to go after Finland and Sweden? I don't know.
Yeah.
At what point does the world say no?
Yeah, I mean, right now I would say, flip of the coin, it doesn't matter that we don't have people there. If our arms are there, we're involved in the war. So, at the end
We're
of the
all
day,
involved
he
in the war.
holds.
Yeah.
Yeah, I mean, he has so many energy resources. It's kind of one of those things that the world kind of needs what Russia has. Again, you look to see what will be the, looking, from the future, 100 years down the road, where will the biggest legislation and change come from as far as like climate change? It's going to be Putin and people trying to, get off some of these fuels and kind of the
Yeah.
drive forward. So, more has been done because of this. Unfortunately, the biggest thing that we need though is China to kind of jump on board, but I don't think that they will. And again, they're still not, they're still, closer. And again, it's been this is going to be one of those things that people analyze going further, and this is going to change the whole rest of the world. And I think people need to understand that. But because of it, we're seeing dollar strength. When we look at a chart, we're seeing, the one thing we do know, like we don't know what's happening in China and their lockdown. We do know that demand is going to be lower, which again is slaughtering commodities. But it's kind of becoming like, where is their guaranteed return right now? All the cryptos down, bonds up a little bit. Dollar's about the only thing that has any strength in there. And the reason why is because we know they're going to raise interest rates. Like if you buy it now, when it goes higher, you could, again, that's buying low and selling high. Like that's the only thing really necessarily in the market. Money managers are in a very different situation right now. Normally when we go through a recession, it's kind of like, oh, we have interest rates to play with. Well, interest rates are zero. We can't play with those. So it's a very hard scenario right now because, normally when the markets start to go down, everything is red, you throw it over in a bond, so you have a guaranteed return. Problem is if you throw money in bonds right now, when they raise interest rates, you're going to lose all that money because of the way that the bonds work. So money managers and hedge funds, this is like worst case scenario. They hate this. We have record high inflation. They have to raise interest rates. The economy is already starting to crash. If Russia gets crazy, it's going to crash even more. It's like, what the heck do you do with this?
And their flight to quality is cash.
Yeah.
Ouch.
When your best option is cash. And again, is it really a bad option right now? Not necessarily, because again, with them raising interest rates, it should jack the dollar. The market's preparing to, price a lot of this stuff in if it hasn't already. But you're seeing the indices, continue to fall from where they were last week. NQ also taking on the shops, getting some of these, 23.6 pullbacks in have been pretty nice and pretty easy. YM kind of the same thing. They all look basically the same. It's almost the same. A big drop, a day of basing, and then a big drop over the weekend. I think big things to look at is one CL. And again, last week we drew kind of this descending channel. We talked about a Harry Potter break of 99.82. Again, we got the basing and kind of the pushing a little bit higher. So you would have wanted to take this as it broke through. And you can see that was at 99.82. We're at 97.30. It will be interesting to see where this kind of starts once the U.S. trader gets online. We tend to see a bit more weakness in the overnight, especially on Mondays, until the U.S. trader gets online. We'll kind of see where this goes. I expect that we do have a bit more kind of a rally up again. I don't think the run for oil is over. And what's interesting about this too is it's not even so much. If you think about it, we just talked about climate change, and it'll be Putin that will be the reason that we have climate change. The reason right now why oil is coming down is not because the United States released the Strategic Oil Reserve. We saw that was over here and it did nothing. It's China locking down and is now controlling. So it shows you just on a global spectrum how powerful China is. And if you're not looking at China or looking at China headlines, although I still think there's some questionable reporting as far as their data goes, this is what's driving the price of oil down to 97. It's China locking down and potentially locking Beijing down. It's not us
25 million people in Shanghai locked down. It's a lot. And start moving that around. Those are large numbers.
And this is why, again, China, not that I think China is the best country to take over next as the world leader, but they're doing it. And unfortunately, the one thing that we had was the petrodollar, and it's going to be a big thing going into the future. If China, again, look what China, it's an active site now where we're having still active genocide, and yet they are still a country, and now they are still calling the shots. And now they're controlling the commodities market, not like manipulating it. They're locking down for legitimate reasons, but you're seeing how all the commodities are just crashing. And then again, look at gold. We talked about gold last week. You wanted to get short. Gold is continuing to drop right? It's continuing to go lower and lower and lower. It's down 1.81% already today, and silver's down 2.5% as these are collapsing. And we said last week, we did warn you, hey, if any opportunity to sell this, sell it. Because Australia was having some problems. We know with the interest rate rise, the crush inflation, we knew that this was going to be a sell. We talked about the 2000 number. We had one area and we missed it by just a little bit, a couple pennies. And look at the run. We were messing with
down through
2000.
19. Yeah, we're
Yeah.
down through 1900 now.
What, a week ago? Yeah, a week ago we were literally at the peak, and we were talking about, hey, get short, get short, get short. And now we're over $1,000 cheaper. And again, look at silver. Last week I talked about 24. I think we're going to hit it by the end of the week, and we did. We got there right at the end of the day. It got down there, right? Actually over here, and then bam, we're going. And I mentioned, it's 2350 on the curve, probably, and we're at 2350 right now. So the next big area to look out for in this one is, again, right there, right? And remember, Wall Street, the Wall Street bet guys said this was going to be 100 at the end of last year, and we talked about $23, and we never got above 26. So again, remember where you get your information from and who, kind of what, where it's coming from. This is why it's important to have a global picture on things. But I think today, again, look for a little bit of a pop around oil. Gold and silver may be a little bit deep. I would wait for somewhat of a pullback. And again, we can we'll run the big fibs down here. Yeah, look at that. 23.6 is coming right around. In gold, 1917. I think that would be an area to watch out for. It was an area basing before the next drive, kind of drive forward, and that was about 6 o'clock this morning. So that would be a decent level to watch out for. Silver's kind of got one as well, but it's up near 24. Okay, there is a level of basing over there. So again, those of you that like the commodities, watch those in there. As far as oil goes, I'd look for a little bit of a pop. And right now, I mean, if you wanted to run fibs from this last kind of push, the 23.6 is kind of in a weird spot, right? It's kind of stuck in between two zones. If we remove it to kind of get just a clear picture, I would say there is a little bit of a zone right now that we're kind of bouncing off of. That may be kind of more of an area. If you wanted to do, let's see, it's kind of late last night. Unfortunately, a lot of this is, if we just start from where the week is, let's see, 25, yeah, it's right there. There's kind of our current push. And again, it goes right back up into that same level. So I would say, if we get an initial push forward, 98.09 is probably an area where if we can get up there and if we don't break through that at the open, that could be another place to get short. And then as far as some of the big currencies, again, the yen's, supposedly horribly weak, but the yen is getting strength against every currency. I think the yen, though, I think we are going to find a bottom right now. On numerous pairs, here's the euro yen. We got the break of that we talked about. Again, 1, 2, 3. There's your basing. There's your explosion through. Pound had the same thing. Actually, pound last week, we talked about 1030 reversals. This is pretty funny. The 1030 reversal on this one on Friday. Again, too late now, but it was right this red candle. Came all the way back up, grabbed the 50% retracement level that we talked about in this session, and then pushed all the way down. And again, the lower level, it broke it, it based, it pulled back, and Harry Pottered south, and now we're lower. So, and then again, dollar yen. Dollar yen a little bit choppier, but we finally broke through. And again, 1, 2, 3, 4, 5 is what broke through. Again, we can delete it now and use it for a little bit better, kind of clearer analysis. I think if the yen is going to continue to get strength, there's not a lot holding this one. I think this comes down to 127.60. So, by the way, it's interesting watching the yen. The yen just did a stimulus check. They just put $48 billion of release. If you remember, stimulus checks typically make inflation worse, not better. When everybody gets that check, it's like, whoo, what can I spend this on? Not quite the raising interest rates that you would think, but it gave yen strength everywhere. Even with this one, it can, we're on a downward trend right now from where we were last week. So kind of interesting seeing yen strength after they get a stimulus check. That's kind of the opposite of what you would see. But right now, again, we're back down to that 128.22. We're not close to that 130. We've really pulled back from it, where the Japanese intervention was coming in. So,
yeah, did you catch Abe, the former prime minister of Japan, chimed in and said it would be wrong of the Bank of Japan, wrong of Bank of Japan to raise rates, like.
I believe Abe. Yeah, I think he raised interest rates twice or something like that, 2 or 3 times. So yeah, he's from the Liberal Democratic Party. So he still has strong influence. Oh, in the ruling Liberal Party. Yeah.
Ruling.
The Abenomics is actually a thing that came for a while ago. And again, if you look at it, Abenomics stimulus policies, deployed a decade ago, have been on the reserved yen spike. And again, the yen, if you look at the actual Japanese growth, it's been nothing. I think they're in 2 decades of no growth. So Abenomics works great.
Yeah, clearly.
Liberal Democratic, stimulus policies work great, guys.
I don't think they're going to pay attention to him.
Yeah.
I don't know, he's kind of losing it in his old age.
Yeah. So like 2 decades or 3 now where they've had like actually like
Like,
zero,
what is
something
that? The
like that.
definition of insanity? Doing the same thing over and over
Yeah.
again, expecting a different result.
hmm Yeah, and
Yeah,
I think I don't know. I think we're rolling into the third decade now.
that's.
It's
I
really,
mean,
but yeah, it was 2 decades of absolutely no growth based off of the Abenomics policies.
well,
And like
maybe.
I
I mean,
said,
if that's what they really, really want. But I don't know. I'm not sure that's what they really,
like I
really
said,
want.
they like the weak currency. They like the weak currency, but
Yeah.
um, it's easy to say that they shouldn't do this when you're no longer in power because you're not on the hook for it. You can't be blamed for
Right. You
it.
can say whatever you
Um,
want. Yeah.
Yeah, yeah. The one news bit today, guys. Again, we're a little bit over it, but I wanted to point out 11 o'clock today. We do have Macklin speaking. He is testifying, so again, you can get some interesting moves. Dollar CAD's up about 45 right now. I just want to show that chart real quick. And again, the reason why it's up right now, Thursday, Friday, I mentioned if we could open up the week up here around 127 ish. I drew this last week and said, hey, listen, if you can find a call spread or like a knockout or something up here, Abe's about, or not Abe, I can't, no, I'm stuck. Macklin, yes. Macklin is about to speak. Yeah, Macklin is about to speak right at his zone where we've had sellers in the past. He is testifying again about handling inflation and how we're going to control inflation. These are the type of scenarios where they talk about, yep, we're going to start raising interest rates. We're going to cut our balance sheet. We're going to do all these things. We have a lot of dollar strength. This is where we could fight back a little bit. So right now, the oil has pushed us in. If we get profit taking from oil, which is down 4% right now, with the U.S. kind of bull trader coming in, that would be great. That should naturally turn the dollar CAD back down, with him mentioning comments as well. That also is the possibility. So it's kind of one of those things. Is there any guarantee it's going to work? No. But we have a couple different things, all that are kind of lining up that should bring this pair back down again, or technically would bring this pair back down again. This is where we can get some type of a week-long position. And again, logging down, not great, but it's kind of factored in at this point. Do we see a reversal? I don't know. Maybe they say, hey, we don't need to release the strategic oil reserve. The prices are coming down, This is where you get those week-long positions. So, I mean, again, I drew this last week, and it's kind of coming right there. So,
all right. With that, yeah, we did go a couple minutes over. It's okay. It's a Monday. There was a lot to talk about today. You have any questions for Nadex, please reach out to us. Customer service at nadex.com. Please email us if you need any help, any questions. We are here to help. Brian and I are also around, and we're very accessible. So if you'd like to have any questions, you'd like to chat with either Brian or me, Brian's email address, support@keeptradingsimple.com. Support@keeptradingsimple.com. My email address, todd.rich@nadex.com. We are here to help. We do, we answer our own emails, so we are around. Please feel free to email us. And really what we're looking at today, I mean, just the quick overview is markets are looking to extend the losses that we saw. Some pretty steep losses yesterday, a big sell-off in the equities on Friday. We're extending that sell-off today in equities across the board for the most part. I mean, you got your isolated stocks that are doing okay, something like Coca-Cola, where their earnings came in. They were absolutely stellar. In a green day, the stock would probably be up higher, but it's up a little bit.
yeah.
But for the most part, stocks down. Commodities all being sold with the exception of nat gas. And we are seeing some strength in the US dollar. That's where people are putting it. It's a risk off situation, and people, the only safe place right now that they can harbor it for a little while seems to be putting it into cash. Brian and I will be back again tomorrow morning. We'll get a glimpse at how the markets continue to react on this Monday, but we will be back tomorrow morning. Thank you so much for joining us. If you like what we're doing, please give us a like on Facebook, give us a like on YouTube. We appreciate that, and we will catch you again tomorrow morning. Until then, good luck in the markets, everyone.